Lessons for a global tech investor. Index Ventures. Bernard Dallé, ex-operating partner of Index Ventures. Moderated by Natalie Kolbe, managing partner at Norrsken 22.
Bernard, welcome. Thank you for your time. I mean, maybe if you can just introduce yourself and give a little bit of your background.
Sure. But before I do that, I wanted to thank Norrsken Foundation for giving me the opportunity to discover Rwanda. So I came here with my wife. We went to Choice Rwanda. We discovered the art of Emmanuel Nkuranga. We went to Meza Malanga, where I know that the chef there, Juve, is from Congo, but we had the best meal of 2023 with my wife.
Fantastic.
And then we went to the volcano park. We stopped along the way. We visited some markets. And what an amazing country with amazing people. So thank you. So in terms of my background, I grew up in Morocco. My father is from Cameroon. My mother is Swiss. As you mentioned, about 26 years ago now, I joined the founding team of Index Ventures. So that was in 97. It took us about a year or 2 years to raise our first fund. So in 1998, we went on the road. We raised Index Ventures 1, which was an $180 million fund. We invested mostly in Europe and also in the US. For the first 12, 13 years of my career at Index, I was investing in software companies, enterprise software, security. I actually made one investment, which is kind of Africa related, because the team was from South Africa. The company was called Mimecast. It was a very successful investment. They had a big market in South Africa, but then also in the US and in Europe, and were eventually acquired for $5 or $6 billion. And another notable investment that I led there was a company called Datadog, which is today listed on NASDAQ and worth $30 billion. And then after the first 12, 13 years, my role switched at Index. I became the operating partner. So essentially running the firm. I switched from investing to running day-to-day operations until the end of 2021, when I retired. And now I'm spending some time discovering investment opportunities in Africa. I was lucky enough to have the opportunity to invest in your fund. Thank you for that invitation. I also invested in an other early stage fund called P1 Ventures, that's seed investing across Africa. So here I am today.
Awesome. Well, Bernard, thank you. Thank you for joining us. I mean, a 24-year career of investing is, you've seen it all. You've seen the highs and you've seen the lows. And you've lived through 3 global financial crises: the dot-com boom of the 2000s, the global financial crisis of 2007 and 2008, and then this most recent one, this kind of boom, bust, boom, or bust, boom, bust of that was COVID-led. I mean, for some of us, not me, but some of us who are living through our first crisis, what are the lessons that we can learn from those 3 crises in this kind of time that we're in at the moment?
Sure. I mean, these were 3 very different crises. The internet bubble, I think our industry, the tech industry, the innovation industry, was the culprit. The internet changed the world. Everybody lost their mind. The valuations went through the roof. The NASDAQ, I remember from the time when we were fundraising for Index Ventures 1 in 98 to the peak in like March 2000, the NASDAQ tripled in value in such a short amount of time. And then, as it should, it was a bubble and it burst for various reasons. You know, capital was becoming a little bit more expensive and companies were burning cash like crazy. So it just kind of deflated. So that was really kind of speculative day traders like creating this bubble. The second one, I mean, the financial crisis, that was it felt much more dangerous, much more serious. And there the culprit were the financial institutions, the bank, the property developers, the property speculators. And, you know, even though the NASDAQ kind of crashed back down to these levels that it had reached after the internet bubble, that crisis didn't last as long, because then by that time we had a huge central bank intervention And very importantly, the iPhone came out. And the iPhone unleashed a wave of technology adoption and technology revolution, which kind of lifted our industry out of the doldrums. And then the current situation, I think there's an element of the current situation that looks a little bit like the dot-com crisis in the sense that the valuations were getting a little bit out of hand. I remember, so if you take a software as a service company or a cloud company, valuations went from 6 to 8 times revenue to 10 times revenue to 20 times revenue to 20 times next year's revenue. And then when interest rates started increasing, it kind of created the impetus for these valuation excesses to be removed. So again, if you exclude the kind of the Magnificent Seven, the Alphabet and Microsoft, etc., and if we look at the portfolio of index ventures, the valuation adjustment was somewhere in the 50 to 75% range. So it's a pretty big valuation adjustment. But so I guess that's where we are right now. So the similarities across these 3 different crises is that the flow of quality investment opportunity never stopped. Entrepreneurs never stop dreaming, never stop innovating. And when you look back at what we've done in index ventures, actually these times are probably among the best times to invest. And I know, of course, if you're an entrepreneur, it's more difficult to raise capital. But these are very good times to put money to work.
I mean, Bernard, on that, when you talking, if I'm an entrepreneur, and we have many sitting in this audience today, it does feel like we're in a capital winter. A lot of the capital has left the room, and yet the entrepreneurs still have to raise money. They still have to put money into their business. What advice do you have to them? I mean, you've lived through this kind of capital winter in previous crises. What advice do you have for entrepreneurs that are looking to raise money in this environment?
It's easy to sit here and give advice to entrepreneurs about raising money in this environment. But I know times are tough. The reality is, though, that capital is there. Funds have been raised. You've just raised $205 million. Many funds have been raised, and they have to be invested. So investors are more gun shy, but the capital exists. So it's a question of being resourceful, networking, trying to meet as many people as you can that can help your business, and never stop telling the story about your business, listening to the feedback that you get from the investors and the people that you meet, and then improving the story. Raising capital is about storytelling. And I think if the value proposition is really there, if the team behind the investment opportunities is a capable team, has the right background and capabilities, then I think if the entrepreneurs continue improving their story, telling their story, surrounding themselves with people who are kind of capable to execute, eventually you can unlock capital. There's quite a bit of money in different pockets. There are private individuals, there's early stage funds, there's corporate capital. So there's money around.
Great. So Bernard, thankfully, COVID is behind us, but so many market observers will say that COVID accelerated the adoption of tech and innovation. What's your view on that?
I don't know if it accelerated innovation. What I remember is when COVID hit, everybody was very, very concerned. We were concerned, our limited partners, the investors in our funds were concerned, the entrepreneurs were concerned. And what we did is we proactively went through our entire portfolio and we took proactive measures in terms of valuation. And I remember at the time, we decreased the value of our entire portfolio by about 20%, which in absolute term was a pretty big amount. But barely had we finished this adjustment, that some of the companies started to report results that were actually better than expected. And what was happening at the time is the economy was digitizing faster. Adoption happened much faster, like on an accelerated pace. And it was amazing to observe. We had never seen anything like this before. So when you see what happened in 2021, there was about $1 trillion of exits, right, in venture capital, $1 trillion. And the revenues of our companies went through the roof. We had many, many IPOs. So what clearly happened is an acceleration of technology adoption. But I don't know that innovation per se was accelerated.
Right. And for, again, with our entrepreneurs here in the audience, they're looking to raise capital, but they're having to walk and chew gum. They've got to raise the capital, but they also have to focus on their business. I mean, what advice, again, from the many years that you've been looking at this, would you say entrepreneurs need to focus on? What do they need to focus on to be successful in their businesses?
Product market fit is the key for startups. So it's hard to be an entrepreneur, right? We've seen some great presentation this morning. Entrepreneurs have to be good at building a business. They also have to be good at raising money. And my observation is that the most successful entrepreneurs are realist optimists. They are optimists in terms of being able to dream about what their company can do, but they're realists in terms of like what to do to raise money. I think what entrepreneurs have to do is initially to focus on the product. They have to solve a real problem that solves real customer pain, that delivers real value to customers. And they have to and then they have to put this product in the hand of early adopters who are forward thinkers, but also representative of the larger customer group. And they have to keep iterating to improve the value proposition. That is really the key, is to make sure that there is some sort of product market fit. So they have to observe their customers, learn from what the customers want, improve the product. And then once they feel that they have that, then they have to start thinking about distribution and how to put this product in the hand of more customers. But that first step of the product market fit, that is the key. At the same time, they have to be amazing storytellers, and they have to be opportunistic fundraisers. When the opportunity is there to raise capital, they have to pounce on it.
Great. I mean, great advice for entrepreneurs. But we also have some venture capitalists, some fund managers and investors in the room. And, advice for them, advice for us as investors. What should we be doing as venture capitalists and investors to keep ourselves relevant and to pick the best opportunities?
I think the only way to be successful in venture capital as investors over the long term is to have a true passion for the industry. And our industry is about curiosity, it's about innovation. So the advice, I guess it's fairly simple, but it's to read, it's to research, it's to meet people, to network, and it's to try to kind of avoid the noise a little bit, to remove yourself from the noisy environment that we're in, where there's fear of missing out and kind of herd mentality, and to the basic work to try to connect with the next entrepreneur who's going to kind of build or solve a big problem, to have empathy for the challenges that entrepreneurs face, and to find a way to meet, connect these entrepreneurs and help them, provide value. I think great venture capitalists are very generous. They give to the ecosystem. At the same time, they are ruthless competitors. So I guess it's all that.
Fantastic. Well, Bernard, I'm sure I could keep you here for another day, diving into these insights. But that was amazing. Thank you so much. Bernard is here. I'm sure if anybody wants to come and pick his brain on any more questions, I'm sure he'll be very happy to give it. A round of applause, ladies, to Bernard. Thank you for your time.